Greetings to you all. It's your boy Chatmaster here. Welcome to Chatmaster FX, where we sanitize you with higher probabilistic standard operating procedures. Today we are going to look at the significant demand engulfment with price approaching, which is shortened as SDE with PA. So this is one of the magic comrades, and it is the last one among the magic comrades. I have already uploaded some of them, so we are going to finish off the magic comrades with SDE with PA. So this standard operating procedure is related to the significant demand engulfment SOP that I uploaded before, and the difference between the SDE, which is one of the big 5 strategies, with this SDE with PA, is that if you check on the SDE video that is among the big 5 strategies, you realize that on that standard operating procedure we have 5 phases. But in this one, we skip phase number 2. Phase number 2 is not available in this one, so you need to take that into consideration. And the other difference is that if you check the SDE video, we may have multiple decision points, and every decision point can be considered valid only if the price approaches that decision point, either in a 3 drive or it's a compression. So we can be able to say that that decision point is significant because of the approach. But in this case, we can only be able to distinguish or to validate that the decision point is significant only if that decision point is either a MPL, a DM, or a QM level. So you need to go to the journal articles that I published in form of videos, so you are going to understand what we mean when we are talking about the MPL, when we are talking about the DM. So go and visit those videos if you did not see them. So let's go straight into the business of today. So this is the anatomy of the SDE with PA. So guys, as you can see that on the left side we have the flippy PA. So in this flippy PA, guys, the first thing that you need to do is to identify the SDE. Once you identify the SDE, then you look for an MPL. Once you look for an MPL, or it might be a Quasimodo level, or it might be a double Maru, but usually I like MPLs, but you are not restricted to using MPL. Even a decision point such as the DM and the QM level can be used. You'll see when we do some examples. So in this flip, guys, you can see that the market is coming from a rally-based rally, and on this rally-based rally you can see that the price came back to this base. Once the price came back to this base, it went up and it went down. Once it went down, it actually went up again to the formulating an MPL, and finally it engulfed this the base. Once this base was engulfed, we can see that the price came here to make a flippy, in the sense that you can see, guys, that here we have support and we have resistance. So flippy is simply where support tends to resistance, or resistance tends to support. So we have a flippy, guys. Once the price made a flippy, it went to an MPL, and also if you check here, this is what we call a fake out. So we can combine a flippy with a fake out. So usually when there is a flippy area and there's a fake out at the same time, that setup is a higher probabilistic. Or else sometimes you may have a flippy but you may fail to have a fake out, or it might be a fake out alone. But usually when it's a fake out alone, or when it's a flippy alone, it's not that strong. It becomes strong when we have a flippy and a fake out at the same time. So this is an example of the SDE with flippy. So those who may be asking, what is really an SDE? So in simple terms, an SDE is whereby, like if you check here, we have a rally base rally here. Once we have a rally base rally here, we draw our base. So we have a rally base rally. So once you have a rally base rally, what happens? The price returns to this base and it consumes the base without engulfing it. So once it reaches here, it goes again. It comes back to this base. So we have 1, 2 touches. So in order for us to validate that this setup is an SDE, we need to have at least 2 visits to the base. So here we had 1, 2 visits to the base. Once we have 2 visits or more, then we can consider that as a SDE. Another condition is that once we have a reaction by rejection here of 2 touches, you wait for the price to drop, engulfing the base. Once the base have been engulfed, then it now qualifies to be an SDE. That's how you can be able to qualify an SDE, guys. As simple as that. That's the definition of SDE. So take note that in other scenarios, it's not only when the market is coming from a rally base rally, but when it's a sell setup, the market may come from a drop base rally. Even if you see that the market is coming from a drop base rally, it's also considered valid. So in a sell setup, we have 2 examples. The market may come from a rally base rally, or it may be coming from a drop base rally. So this is the example of a flippy, guys. So let's go to accumulation. On accumulation, we can see that this market was coming from a rally base rally, or the market may be coming from a drop base rally. So those are the 2 conditions that we have to look for if it is a sell setup. So we have a visit to this base, first visit, second visit. So we need at least 2 visits. Once we have 2 visits, then we can be able to call it a reaction by rejection. So once we have a reaction by rejection here, then you wait for the price to engulf this base. Once this base have been engulfed, then that one qualifies as an SDE. Once you have an SDE now, you wait for the price to come back to the MPL area. Once the price comes back to the MPL area, then you can be able to place your trade. So this is kind of an MPL area or a QM level. Those who have watched the Quasimodo video, you know what I am talking about. So this is a QM level as well, because this low has been engulfed and the market came to create a lower low. So this is an MPL, or we can call it a QM level here. So once you see that you have your SDE and there is an MPL or a significant decision point here, such as the DM, then you wait for the price to come to the MPL. And as the price is coming to the MPL, it must come in the form of a flippy or its accumulation or a trade drive. Then you know that your conditions have been met. Then you can place your trade here. So that's how you look for accumulation. So you can see that this is accumulation in the sense that the price is having a weak momentum towards the MPL area. Then you can be able to place your trade here, and your safest profit will be here, the depth of engulfment. Then we have a 3 drive, guys. Here we have a 3 drive. I have explained the SDE, that the market may be coming from a rally based rally or it's a drop based rally. So once we have that condition, you wait for the price to make at least 2 visits to the base. Once we have at least 2 visits to the base, we wait for the price to engulf the base. Once the base is engulfed, then you wait now for the price to come to a significant decision point. Once the price is coming to a significant decision point, it should come either in a form of a flippy, whether it's a fake out, whether it's accumulation, whether it's a 3 drive. And in this case, this is an example of a 3 drive. So the market came to the MPL with a 3 drive. So once you see this 3 drive, then you can be able to place your trade inside the MPL. So if this higher high is nearer to the MPL area, you can put your stop loss just above. The risk will be very low, and in this case you put your stop loss just above here. Look at this example. This higher high is actually very far. So if you are someone who is risk sensitive, you may put your stop loss above the MPL here. Guys, if you want to be a successful trader, the first thing that you need to look for is your risk. You need to manage your risk very well. Look at your risk before you take any trade. So guys, this is the anatomy of the SDE with PA. So let's go to the terms and conditions for a sell setup. Take note, guys, that in this case we are dealing with a sell setup, as you saw in the anatomy section. However, you can also place these trades even in a buy setup. So when you are dealing with a buy setup, you just flip it around, then you can be able to trade it even when you see a buy setup, because this standard operating procedure works both in a buy setup or a sell setup. As you saw, for all my standard operating procedures, we all need to deal with the buy and the sell setup. It doesn't matter when you see us giving you examples of a sell setup, it's just for the sake of simplicity, and so that we try to compress the cost so that we don't take it long. Because if you put buy and sell setup information at the same time, it might end up confusing you as well. But however, in the chart examples, I have also given some buying setup so that you may just have a general ideology behind how you flip it around and be able to trade buy setups successfully. So these are the terms and conditions, guys, for the SDE with PA. There should be phase 1 of the SDE, as we saw, that the market should be coming from a rally base rally, or the market should be coming from a drop base rally. Once you see that, then you leave phase 2 of the SDE, then you complete all the other phases. So the other condition is that the price should approach a decision point in form of a flippy, or its accumulation, or a 3D. The stop loss should be above the MPL or above the higher high. You just decide if the price or the MPL or the decision point is nearer the higher high, so it's good for you to put your stop loss just above the higher high. Or if the MPL is far away from the higher high, then it's good for you to put your stop loss above the MPL, so that you do not have a large drawdown, or you do not suffer from large sources if the trade goes against you. Then the stop loss should be above the MPL, as I have alluded before. Then the target profit, look for clean demand. Look for clean demand in the immediate past that has a potential to hold the price. So you have to look for a clean demand, guys, or you can look for the depth of engulfment, as we said it in the SDE video. The terms and conditions may be similar, so you can also look at the depth of engulfment of the base. That's where you put your target profit. So guys, let's go to chart examples. So here, guys, we are on volatility 101S index on M13. So guys, the first thing that you need to do is to identify the SDE. As you can see, guys, here we had a drop base rally. We had a drop base rally. Once you have your drop base rally, then what do? You wait for a reaction by rejection to the base. So sometimes the reaction by rejection may not occur on the demand. It might just occur just above. There might be a space between, but this reaction by rejections will be nearer to the base. As you can see, guys, that we had at least 1, 2, or 3 guys that came to the base. They did not touch the base, but they were nearer the base, so it validates it as a reaction by rejection. And we can see, guys, that there was an engulfment here. There was an engulfment. Once this base have been engulfed, then we wait for the price to come to a MPL. Once the price comes to an MPL, then you can be able to place your trade. So you can see, guys, that the price came to this MPL in form of accumulation. The price was making an accumulation, and here we have a clear MPL. You need to know which MPL you are dealing with. Go to the journal article on MPL. You will know which MPL that you are dealing with. So as the price reached to this MPL, the price dropped. So you can see, guys, that the stop loss, if you put your stop loss here, your risk will be too much. So once you see that the MPL is far away from the higher high here, you can just put your stop loss just above the MPL. You put your stop loss above the MPL. So guys, or you can put it above this one. Yeah, this one is more safe. You must put it just above here, and you'll be risk sensitive as well. Just put it here. I think it will be a good target profit, good stop loss. So yeah, this is an example of accumulation to the MPL. So this is SDE with PA. And what is the PA here? Is the accumulation. So the target profit should be the depth of engulfment of the base. So the price came to this base, to this depth of engulfment. So you'll be putting your safest take profit here. Let's go to example number 2. On example number 2 here, the market is coming from a drop base rally. So the market is coming from a drop base rally, and what happened here, we can see that we have a reaction by rejection here of at least 1, 2, 3. So once we have that reaction by rejection, we saw that this DBR, this base was engulfed, and the depth of engulfment was to this extent. And what happened here, we had an MPL here. Once we had an MPL here, the price approached the MPL in the form of a 3 drive. Then you can be able to place your trade here. So this is an MPL. And you can see that this price, it was dropping. There was a strong momentum to the downside. So you may put your stop loss above here. There's I can put it here above this high. You can see that if you put your stop loss above the high here, it might be very risky. You may lose a lot of money if the trade goes against you. So to be safe, to be risk sensitive, you may put your stop loss just above here. That's where you put your stop loss. So this is an example of an SDE with the price approaching of the 3 drive. So we are on example number 3. On example number 3, we can see that we had this chart was cutted off because the 3D here took time to formulate, but this zone indicates an SDE that is to the left side. So there was an SDE there, and there was a reaction by rejection here, and this was kind of an MPL area that we had. There was an MPL here. So remember that sometimes the decision point should be here and the MPL should be here, not to be at the supply or at the demand here. You can see this is our supply. The MPL was at the supply but to the left side, but mostly the MPL should be inside here. So the market actually reacted. As you can see here, we had a decision point here. We had a DM of type 1 here. There was a DM of type 1 here. So sometimes you may not be having an MPL inside here, but if you have a decision point such as a DM, you can be able to take a trade. So here you can see that the 3 drive actually occurred nearer to the higher high of the SDE. So once you see that this is actually near the high, then you can put your stop loss just above, because you know that if the trader goes against you, you will have lost not a significant amount of money here. So guys, you need to be risk sensitive. So this was the reason for entering the trade, because we had a valid DM here inside here, because this is where you look for the MPL mostly, not to look for the MPL to the left side. So yeah guys, this is an example in crash 1000 index M30. Let's go to example number 4. So in example number 4, guys, as I've promised that there will be a buy setup just for you to be familiarized with the buying setup. So as you can see guys, here the market was actually coming from a drop base drop. As the market was coming from a drop base drop, what happened? We had a rejection by rejection here of at least 2. Once you see that, then the condition will be met. Then you wait for the price to engulf this DBD, and finally the price was able to engulf this DBD. You can see this insignificant engulfment. Once the price engulfed this DBD, You can see that the price made an accumulation to the QM level here. We have a QM level here, which is also a good decision point that you can be able to use. So this is the reason why this trade was taken, because there was a QM level here and there was a decision point here, but is this decision point, I think, doesn't qualify among the significant ones. So the QM was the reason for entering this trade, and when the trade came here in form of accumulation, the price was able to go up. So this is an example of the SDE with PA. So you would put your target profit would be somewhere here, and maybe you can leave some of your trades to run. You leave some of your trades to run, knowing that your safest take profit has been hit. Let's go to example number 5. On example number 5 here, the market is coming from a rally-based rally. And what happened here, we had a reaction by rejection of at least 1, 2. Once we have that condition, we have also 3 here before the engulfment. So once you know that we have reaction by rejection, what happened now, that the market was able to engulf this RBR. Once you have an engulfment here, you wait for the price to come to the MPL. Yeah, so here guys, we had a flip here. We had a flip area where this turned from support to resistance. Once we had that condition, guys, we may have considered this as a valid MPL here. We may have considered it as a valid MPL. So if you may have entered your trade here, and if you may have put your stop loss above the Quasimodo level, then you would have won the trade. But if you had put your trade here, you may have lost it on this MPL. So this is one of the disadvantages of the flippy. So I usually like that the flippy should be in conjunction with the fake out. If the flippy is in conjunction with the fake out, those trades, they are very, very nice. And you can see here we have an MPL area of MPL type 1. MPL type 1 here, even if it's not inside, it's outside, it's also another condition. So but if you had considered the QM level, as I have alluded before, that you can consider the QM level, or you can consider the MPL, or you can consider the DM. So in case here we had an MPL here, if you had considered this MPL, you may have won this trade, depending where you would have put your stop loss. Or if you would have waited for the price to come to this QM level, you may have entered here and you would have enjoyed the way down. Or you may have waited for this. There's a significant decision point here. Just go and check on the DM journal. You may have missed the trade. If you had considered this, you may have missed the trade. So guys, yeah, you need to select and see which one is the best for you to take a trade. In this case, you can see that the price, when it came back to the QM level, it actually respected it and it went down. So this is an example of SDE with PA, the PA in type of a flippy. So let's go to example number 6. On example number 6, guys, we have an RBR here, and we have a 1, 2 reaction by rejection to the RBR, or you may have considered your RBR to be this one, and also this one would be your 1, 2 visits to the RBR. Then the market finally it was able to engulf the base. Once it engulfs the base, then now you wait for the price to come to a valid decision point. So here we can see, guys, that the price was coming in form of accumulation. There was accumulation here, and you can see also that there was a flip here. There was a flip where support turned to resistance. So here we have a DM. We have a DM here, W Maru, and you have also a Quasimodo level here. So if you had waited for the price to come to this Quasimodo level, you may have missed the trade here. You may have missed the trade here. But if you had considered this W Maru inside, then you would have cashed the trade here. So yeah, these are the examples of SDE with PA. So just to have a synopsis of what we have discussed, guys, this setup is similar to the SDE, which is one of the big 5 strategies. The only difference is that when we are dealing with SDE with PA, we leave out level number 2. Level number 2 is not necessary when it comes to SDE with PA. You can leave out that level 2. So that's the difference that we have, and we can also see that on the SDE we had multiple decision points, and even if it's not a qualified DM or a qualified MPL, you would enter the trade only if you see that the price is reacting to that decision point in form of a significant PA. So, but as we have seen in this case, we are only dealing with significant QM levels, and we are dealing with significant decision points such as the W Maru, and also that there must be an MPL. That's where you can be able to place a trade. So guys, those are some of the differences that we have on those 2 standard operating procedures. So thank you guys for watching this.